Welcome back to Profit Insights, your go-to podcast for the latest in finance and market movement. I'm your host, Dusty, ready to guide you through today's riveting market happenings with calm and thoughtful expertise. Starting with the market overview. On October 27, 2025, U.S. equity markets soared to fresh all-time highs, driven by notable gains in the Nasdaq Composite, which jumped an impressive 1.9%. Primarily due to the mega-cap tech giants leading the charge. But it wasn't just a tech story. The S&P 500 and Dow Jones also hit record levels. Investor enthusiasm was high, fueled by hopeful whispers of progress in the ongoing U.S.-China trade talks, along with uplifting corporate earnings reports. Globally, markets were in lockstep, with the Nikkei in Japan, South Korea's Kospi, and Taiwan's TAIEX all ringing in new milestones. Remarkably, this optimism thrived even amid the continuing U.S. government shutdown, which has been delaying crucial data releases just as the Federal Reserve gears up for a key policy decision. Speaking of earnings, the third quarter season is revving up, with about 35% of S&P 500 companies having reported results. Out of these, 85% have delighted analysts by beating earnings estimates, the highest beat rate in 4 years. Tech behemoths like Microsoft, Meta, and Apple have certainly played their part, adding a solid foundation to this rally. Notably, IBM stood out by revising its full-year revenue outlook upwards, spurring its stock to climb 9.3%. Intel, too, exceeded expectations on sales and margins, further reinforcing the notion that corporate profitability remains resilient despite broader economic headwinds. Shifting gears to economic indicators, September's inflation data signals a potential easing of price pressures. The Consumer Price Index inched up by 0.3%, matching predictions, while the core CPI rose a slightly lower than anticipated, 0.2%. This resulted in a year-over-year headline inflation rate of 3.0%. Yet, consumer sentiment took a slight hit, with the University of Michigan reporting a drop from 55.1 in September to 53.6 in October. Meanwhile, the Atlanta Fed's GDP Now model indicates a robust 3.9% growth rate for the third quarter, pointing to enduring economic vitality. With the Federal Reserve's meeting on the horizon, market consensus leans towards a 25 basis point rate cut, aligning the federal funds range to 3.75% to 4.00. Another cut is eyed for December. However, the government shutdown has cast a shadow of uncertainty over policymaker deliberations. In the Treasury market, 5-year tips reflect subdued inflation expectations with yields declining, while the 2-year Treasury yield suggests anticipation of imminent rate cuts by market participants. Sector-wise, energy and technology stocks were the week's winners, each climbing around 2.8%. Meanwhile, utilities continue to benefit from AI-driven data center demand. Financials attracted a fair share of excitement too, with deals like Huntington Bancshares' $7.4 billion acquisition of Cadence Bancorp and Novartis's purchase of Avidity Biosciences for $12 billion. This robust deal-making activity has boosted U.S. M&A volume by 36% year-over-year, reaching an impressive $1.6 trillion. Looking ahead, all eyes will be on the earnings from heavyweights such as Visa, PayPal, and Alphabet, as well as on any fresh insights from the APEC summit between Presidents Trump and Xi. These developments will be crucial in guiding market sentiment and policy direction as we tread further into 2026. As always, thanks for tuning in to Profit Insights. Keep your ears to the ground and stay informed. And remember, when the dust settles, only the truth remains. Until next time, take care.